Did you know that according to star investor Cathie Wood, you should never sell your Tesla stock? A lot of people heed Cathie Wood's advice as she appears to be right most of the time. You surely would not want to miss why Wood gave this specific advice. Cathie Wood's fund management firm ARK Invest sees Tesla shares more than quadrupling. Who is Cathie Wood, and why are her words worth heeding? Cathie Wood was described by Forbes as an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. Cathie Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. In recent months, Cathie Wood saw Tesla as being worth nearly $5 trillion in 2026. The star investors fund ARK Investment Management bets big on electric vehicle maker Tesla. ARK Investment Management LLC, or simply ARK Invest, is an American investment management firm based in St. Petersburg, Florida, that manages several actively managed exchange-traded funds. ARK Invest focuses solely on disruptive innovation and offers investment solutions to investors seeking long-term growth in the public markets. The company also invests in innovations like self-driving cars and genomics, which explains why they are keeping an eye on Tesla. Wood stated in an interview that her base case on Tesla is around $3,000 a share, which has since been updated, and continued to say that their estimate for Tesla's success has gone up. She explained that this is due to their market share that went up dramatically instead of going down, despite other companies' ventures into the electric vehicle industry. Cathie Wood's ARK Investment Management now expects Tesla Inc. shares to more than quadruple to $4,600 by 2026. Last year, ARK last said it saw shares of the electric vehicle maker hitting $3,000 by 2025. But has since updated its price target amid new expectations around Tesla's prospective robotaxi business and capital efficiency. The firm's bull case suggests the price could rise to around $5,800 by 2026, and the bear case suggests $2,900, still around 3 times more than the current share price of $1,005. Although tuned to our expectations for 2026, we believe our Tesla model is methodologically conservative. Tasha Keeney, an ARK analyst, wrote in a blog post last week, "We assume that Tesla stock will trade like a mature company rather than a high-growth one in 2026. Wood has long been an ardent supporter of Tesla and its chief executive officer, Elon Musk. While the flagship ARK Innovation trimmed its position in Tesla a few months back, the electric vehicle maker is still its largest holding, making up 10% of the fund. Tesla shares gained about 1.8% Monday. A key driver for ARK's new model is expectations of greater demand for autonomous ride-hailing, an estimated $11 trillion to $12 trillion market, according to Keeney. ARK has also increased its conviction in Tesla's ability to achieve full self-driving, with the carmaker's prospective robotaxi business contributing to a 60% chunk of its expected value in 2026. However, New Construct CEO David Traynor said, "Tesla has been down every day, so it's going to be hard to maintain a position when the stock has been getting crushed that much. But I also think it does reflect a little bit of change and confidence." He added to say, "A lot has happened in the last few months that would give anybody with a sense of fiduciary duty pause about what to think about Elon Musk and the businesses he's involved in." Still, Wood remains a vocal Tesla proponent. In fact, in an April interview with Yahoo Finance, Wood said that her confidence remains highest in Tesla. This comment came after Wood revealed ARK had met with General Motors GM CEO Mary Barra. The General Motors Company is an American multinational automotive manufacturing corporation and is the largest automaker in the United States and was the largest in the world for 77 years until losing the top spot to Toyota. More than that, Cathie Wood believes that one can become a millionaire with Tesla stock. According to her, when you look at Tesla's revenue growth for the past 5 years, it is compounded at roughly 48% per year. She emphasized that it was even at a time when Tesla had been facing a lot of controversies. She further stated that their forecast, referring to herself and ARK Invest, for the next 10 years is in the 50 to 60% range. In a previous video, Wood explained how investors have the chance to become a millionaire by holding Tesla shares until 2025. When asked about her reasons for setting a then $3,000 price target for Tesla by 2025 before they released a revised open-source model later on, she said that there are a few key variables, one of which is the market share of the EV market, which is in the low 20s worldwide, as she claimed, and she believes Tesla will be able to achieve that. She added that currently in the US it is around 60% share. Wood shared that they, referring to herself and her investment company ARK Invest, believe Tesla will continue to lead the electric vehicle market, especially if Tesla is the first to be successful in autonomous driving in the United States. She said, "We're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20 to 25% share of the total auto market in 5 years. That's by 2026. What we're really interested in are the corner cases," says Cathie Wood. She said that Tesla's pilot test for full self-driving has just started, and it includes the safest Tesla drivers there are. These drivers had to earn a 98 to 100 score. According to them, it is a dream when it works, and it is terrifying when it does not work. These well-experienced and safe drivers are guiding Tesla and hit a button, and that film or video goes back to Tesla so they can learn from their mistakes. Drivers hit the said button every time there is a miss, whatever that miss is, which is most often stopping because of uncertainty. Wood believes that Tesla will be able to perfect this over time, and that within a year more, people will have had an experience in an autonomous vehicle. According to Wood, the total cost of ownership of an electric vehicle is less expensive than that of a gas-powered vehicle, and soon we think within 1 to 2 years, and maybe even sooner with subsidies, the actual sticker price of vehicles, electric and gas, we think electric vehicle prices will drop below gas-powered vehicle prices and continue to drop. Our latest thinking is that by the year 2026, the average electric vehicle will cost about $15,000. Wood explained that the reason they believe that there is going to be quite a bit of commoditization is that they believe that autonomous vehicles would be taking off by that time. She added that by then, autonomous vehicles will be run in autonomous taxi networks, so fleets and design are less important as the main focus is to develop the ability of these cars to get people from point A to point B. Overall, Cathie Wood remains to be a vocal Tesla proponent. It can be noted that when the world's largest maker of electric vehicles was booted from the S&P 500 ESG index in May, Wood came to Musk's defense on Twitter and called the move ridiculous. "One thing we have to be careful not to do is we must not have a closed mind," Wood said. "And when we see success, we have to acknowledge it and learn a lot more about it, so we're on a fact-finding mission." Cathie Wood has more than 40 years of investment experience under her belt, although she became better known on a wider scale in 2020 when her ARK Innovations Fund returned almost 150% that year. According to some, people who are most likely to be interested in Cathie Wood's investing philosophy are those who are relatively young and those interested in disruptive and emerging technologies. Additionally, those with a risk tolerance that allows for a longer time frame might benefit from Wood's approach to thematic investing, which takes a long-term view rather than focusing on short-term profits, though technology and disruption could see a lot of growth. Moreover, those who are looking to potentially take advantage of large-scale shifts in the way we live and work are likely to be drawn to Wood. It could also make sense for those who want to add potential growth to their portfolio while still maintaining a more traditional asset allocation. Subscribe to this channel to find out more things you should never do with your Tesla stock.